Red flags for stocks. So, stocks, they could fall unexpectedly if you're not paying attention. So, the weird thing is, stocks will throw out red flags before they fall. It's just you have to look a little hard at the stock and look a little hard at news surrounding the stock. So, in this video, I'm going to show you some red flags to look for that will show you that a stock could fall, so you can make your adjustments while you can. So the first thing that you want to do is um, use as much free information as you can. Take advantage of that, from social media to the free Yahoo Finance, Google Finance. One of the things that you can do is you could actually put a Google alert for any of the stock symbols in your portfolio, because usually you may not check how all your stocks are doing every day, and it's not necessary that you do that. But if some news comes up on one of your stocks and you're not paying attention, you could really be caught off guard. So you could take if you own 10 stocks, have the 10 stock symbols and the 10 names of those publicly traded companies, and just put that in a Google alert, and that'll come in through your email. So you could schedule that email to come to you daily or weekly. And then if something comes along about that company that's in the news, you can review it and see, oh, one of my stocks is in the news, and see whether this is worth trading on this information. Um, Another great thing to do is look specifically for CEO interviews of the companies for the stocks you own from the major financial networks, CNBC, Fox Business, and Bloomberg. And not only what the CEOs are saying or how they are saying it, if they appear uncomfortable when talking about forward-looking projections, if they're evasive when they're being asked questions. It's a really good way to see if you feel that this company has a confident leader, has any confidence going forward. Now, these are general sort of looking at using news and free information. Now I want to go into kind of specific metrics you can look at for red flags with a company. And one of the first things you can look at is the call to put ratio on the options of the underlying stock. If your stock usually will have options trading under it. People who are really good at stock trading will usually, if they think a stock is going to fall, are going to buy a lot of puts, and they're going to buy them maybe 3 to 4 months out, or maybe 1 month out. But there'll be more puts open than calls, and so the call to put ratio will reflect that. So if you see a lot more puts being bought on the stock in your company, that could be a predictor that the stock could fall, that these people know something that you don't know, or they suspect something that you haven't even thought about. Another thing is insider selling. Insiders are people who work at the company, who own usually a lot of shares. If they're selling at a high rate and the stock hasn't fallen, that means they know something that you don't know, that the public doesn't know, and that could usually also be a predictor that the stock is going to fall, especially if the insider selling is accelerated. Another red flag indicator, and this is something I covered in a previous video, if good talent is leaving. If, let's say, the designer of a car company, all of a sudden their head engineer leaves to go somewhere else, they either could be leaving because another competitor they believe is going to have a brighter future, or the company they're working at, just he realizes there's nothing good coming out of this company, and he wants to jump ship now. So if good talent is leaving, if you know a company really well, about if the company uses creativity or engineering, whatever it uses, if that talent is leaving, that's a red flag that that company could be in trouble. And obviously check the company's financing. Just about every company runs on debt. Even Apple, which has sitting on $200 billion, they use debt to finance their projects. So if a company has to pay higher interest rates, if they have to pay higher interest on their bonds, or they're dealing with unusual borrowers, if they're not using traditional banks, if they have to get capital through weird ways, like certain sovereign, they have to go to weird banks that you've never heard of to get their financing, that's a company that may be in trouble, because they're not trusted as a good company by traditional banks and traditional financiers. So if they have to find unusual ways to finance their projects, that is definitely a red flag. So looking at all these red flags will help you predict whether or not a stock is going to fall. and really help you get rid of a stock before it falls over a cliff. So I hope you enjoyed this video. If you did, please be sure to like, share, and subscribe. Okay? Thank you very much. Bye.